All right. Well, now for another perspective when it comes to the economy. We try to give you some different voices in the economy and where we are and how things can turn out. Joining me is Nick Hopwood, a certified financial planner, founder, president of Peak Wealth, Southeastern Michigan, peakwm.com if you want to find out more. And so, Nick, good to have you back.
Good to be here, Steve. Thank you.
I couldn't help but start in the break because I'm always curious. You know, you got one person saying this, another person saying that, somebody saying something else. I don't know. But markets have been rough since the 1st of August. Stocks and bonds going down at the same time, apparently, right? Tell me about this.
Yeah, the correlation between stocks and bonds, meaning them moving in lockstep, has been just awful over the past 3 months. You know, stocks have been down about 8% from the summer highs, and bonds have been down about 6% since the spring highs. And so that makes it really challenging for an aggressive or conservative investor when both are going down at the same time.
My money market's not down. I'll tell you that. So, you know, somebody gave me good advice on a money market. His name was Nick Hopwood, by the way. And that hasn't gone down. So there are places you can hide from the storm, aren't there?
Yeah, good point. You know, we've been beating that no lazy money market drum for over a year now, and now the yields are, you know, over 5% on money markets. But that's a short-term place to put money, right? I look at that as somewhere for your emergency fund or money that you need over the next year that cannot be put at risk. But if we're investing for longer time, you know, a couple years plus, you know, think 5-10 years out there, I don't think that those money market rates will still be around because the Fed will probably cut rates at some point. In fact, the market thinks the Fed will cut rates as quickly as June of next year. So those money markets won't last, but if you're locking in your 5 and 10 year bond funds yields of over 5 and 6%, you know, I think those numbers will last much longer.
So if it's the 6% bonds, how long do you have to lock in for? Average, just thumbnail. I'm not going to put it on the test or anything. I'm just curious.
Well, we recommend you know, mutual funds and ETFs that have daily liquidity. So technically, you're not locked in, but they do own thousands of different bonds inside those funds, and the, you know, duration could be several years.
Several years. And see, that makes a lot of people, makes me nervous, makes a lot of people nervous. If you see an opportunity to go pick up a piece of real estate or something and you're locked in there, then you can't do that. That's why I like the liquidity. I agree with you. Huge deficits in the debt. I mean, we talk about this a lot, Nick. It doesn't get any better. A new war out there now, of course, and they want to dump a pile of money into both wars. They want money for Ukraine, money for Israel, money for more weapons here in America. I mean, how deep can we go? We're $33 trillion in.
Yeah, it's disturbing, you know, and I think that, you know, it's getting more and more attention, especially with the yields coming up from 1% to 5% over the past couple of years, and the amount of debt service that comes out of the budget as a result of the large debt and the large interest rates, the higher rates. So it's garnering more attention. No one really knows, you know, where the breaking point is, but it is extreme. And, you know, the way that I talk with my clients about this is, you know, the taxes probably will have to go up between now and retirement. And so let's play the long game. Let's play Roth IRAs, Roth 401ks, HSAs. Let's take advantage of the market being down and do some Roth conversions. And, you know, even if you're at a high rate today, the rates will probably be going up at some point in terms of taxes. So that's the way that I approach that.
So, I don't trust the government on this. It's tax-free when you take it out. So they say today. 5 years from now, they might need more money, and therefore they're going to come pillage the peasants again. That's what concerns me. So you say pay the tax now and get it over with. My concern is that they're going to come tax us again anyway. Am I paranoid?
Maybe a little, but, you know, anytime the tax laws have changed, it's been things like this have been grandfathered in. So they could say, hey, you know what, Steve, your Roth IRA, you know, that's fine. You're going to continue with that tax-free benefit, but you're no longer allowed to do any more Roth IRA contributions. So if there were tax law changes, that would probably be the way that it would go, rather than, you know, going back on their promises from the past.
Right. Can't put any more money into it because you've made too much money or whatever it might be. All right. So the Fed, you just mentioned this. They meet next week. You're not expecting any changes to the interest rates going forward, right?
Right. The Fed is expected to hold, and then there's another meeting in December, and we're expecting them to hold as well. And that's partly because inflation has been coming down. And I'm sorry, the last 2 months, right, it ticked up a little bit, but it's expected to be coming down again in October and that in November. And also gas prices, even though we have the war, gas prices have remained level to trending lower, which is a surprise. But also, we talked about how rates have been going up in the past few months. Well, that acts as a mechanism that slows down the economy as well. So that's kind of taking care of the Fed's work for them, so they're able to put it on hold.
But the housing market remains impossible for a lot of people. Housing remains pretty high as far as the price of single-family homes goes. Mortgage rates over 7%, basically pricing a lot of people out of the market altogether, right?
Yeah, it's challenging for young people or people that are locked into low rates that want to move. But when we talk about housing inflation and how that affects the CPI, if you actually take housing out of the CPI number today, CPI would be at 2.0, which is fantastic. And when we look at the way that it's calculated, there's a delay, and we have this owner's equivalent rent, which that number has been fading lately. So as time rolls forward, I think that this CPI is going to be in the twos by the spring, maybe low twos by the spring, and the Fed will declare victory on inflation.
We'll see if that happens. Oil, meanwhile, obviously with the wars we just mentioned, the oil prices today, they're back up over $90 a barrel. They've kind of fluctuated in this 85 to 91 or $2 range for the last couple of weeks. But anything happens with Iran, Saudi Arabia, the shipping routes in the Middle East, and we could see oil quickly shoot up. Right now we haven't, but we don't know what's going to happen, do we?
No, we don't. But the good news is with the oil prices, we have not seen that big spike like we saw after Russia invaded Ukraine. Recall, oil went from like 80 to like 130 overnight on that Ukraine invasion. And with Israel, it's been pretty flat here, range bound, as you mentioned. So that's really great news as far as energy inflation goes. And, anything's possible, like you say, but so far so good.
All right. And for people wanting to know how to optimize their Social Security, they can reach out to peakwm.com/Gruber. Get your free Social Security optimization analysis. Put that QR code for the people that are watching on TV. We got a QR code for Nick so people can find it much easier. There it is. If you're at home, click that. If you're smart enough, I can never figure these things out. Ivy has to do it for me. Anyhow, if you do that with your phone, it'll take you right to peakwm.com, peakwm.com/Gruber. Find out about Social Security maximization while you're trying to save a few nickels along the way. Nick Hopwood, always appreciate you being here.
Thank you, Steve. My pleasure.
All right. We will talk soon. And, if I had a crystal ball, I don't know what I'd do with it. Would you want to know? Would you not want to know? I don't know. At any rate, treasures in your drawer after this.